Good evening, I'm Liyana Hassanel. Welcome to Bizworld. The Energy and Natural Resources Ministry, KETSA, has attracted an estimated 5.8 billion ringgit worth of potential investments in the 18th week of Expo 2020 Dubai, held in the United Arab Emirates. According to the ministry, the signing of two MOUs between Gading Kencana and Saudi Arabia's March Global LLC involved a potential investment worth 4.22 billion ringgit. The MOUs is for the development of large-scale solar projects in the Middle East, Africa and the Asian region, which are expected to generate investments worth 4.2 billion ringgit. Meanwhile, the MOU between Concord Renewable Energy and Inyo Jenbacher & Co. from Germany on technology and equipment for biogas power plants is expected to involve an investment worth 20 million ringgit. Foreign investors ended its three-week streak of net inflow on local equities last week, as they recorded cumulative net outflow on a shortened trading week due to the Chinese New Year holiday. MIDF research said, based on data from Bursa, Malaysia, foreign investors net sold 160 million ringgit of local equities, compared to 116 million ringgit net buy in the preceding week. As market reopened, foreign investors and retailers sold 131 million and 10 million ringgit net of local equities respectively. Local institutions, meanwhile, started the week as net buyers to the tune of 142 million ringgit, while the largest net selling by foreign investors was recorded on Monday. The momentum of foreign net inflow on Friday slowed down to 19 million ringgit. Malaysia's gross domestic product, GDP, is expected to have grown 3% year-on-year in the fourth quarter of 2021, compared with a 4.5% contraction in the prior quarter. According to Moody's Analytics, it expects continued strength in exports and a revival in private consumption to have supported Malaysia's final quarter. It added severe resurgence of COVID-19 weighed heavily on the economy through much of last year, resulting in consecutive quarters of contraction as households retreated and private investment took a back seat. The weakness in domestic demand more than offset the gains from a relatively strong trade position over this period, but domestic conditions improved in the final quarter. Higher vaccination rates and the easing of restrictions paved the way for a visible turnaround in retail spending since October 2021. Malaysian oil palm growers are benefiting from Indonesia's new export policy through higher crude palm oil CPO prices. According to Maybank Investment Bank, Indonesia's new export ruling that came into effect on January 27th has widened the domestic CPO price gap between Malaysia and Indonesia by 246 ringgit per tonne to 1,378 ringgit per tonne. Indonesia said exporters must set aside 20% of their shipments for domestic market obligation to ensure sufficient cooking oil supply in the domestic market at affordable prices. And that's all for Bizworld. I'm Liyana Hassanel. Thanks for tuning in and stay safe.